right. Good morning, guys. Morning, everybody. Good morning, good morning. Welcome in. Nicole, Spliff, welcome in, Spliff. Edwin, Emmanuel, Emarco, Akeem, welcome, guys. Welcome in. Happy Monday, June the 2nd. We are officially in June. Welcome in, everybody. How is everybody doing? How is everybody's weekends? Did you guys finish off Friday nicely? Nice little Friday session, and you went into the weekend refreshed? Welcome in, guys. How's everybody doing? Everybody's sleeping in this morning. I feel like everybody's sleeping in. It's a new month. Everyone's like, oh, it's summer. We're gonna take it easy now. 9:30 at night. Wow. Where are you at? 9:30 at night. You must be somewhere far away. NVO, yes, I am watching NVO. Maybe we'll talk a little bit about NVO today. NVO, actually one of my main watches this week because I want to start doing some things. We'll talk about it, but NVO is going to be something that we discussed today's session. Welcome in, everybody. How is everybody doing? Fancy, welcome in, Fancy. Levels from SPY and Friday was really key. If you guys were here on Friday, you know what we talked about, right? Friday, Rav and I were actually both on Friday session. We spoke about those levels on Friday. Big. There we are. We're back. I pressed the wrong button in OBS. Anyway, guys, let's dive in. So we have a lot to go over this morning session. We are going to jump into our charts. We're going to talk about our economic data. Big stuff happening on not really the earnings docket, but mostly on the econ side of things today. So we are going to discuss this now. It is June 2nd. It is 8:34 a.m. Let's dive. Jetson, thank you, Jetson. Thank you, Joshua. You guys are awesome. Thank you very much. You guys are incredible. Let's move on, guys. Let's dive into our docket for today. So on the economic docket for today's session, right? Today is Monday, June the 2nd. In this morning session, we have some big economic. That starts with PMI at 9:45. Be careful of that. ISM 10 o'clock. It's also going to be big in construction spending. So today's session really is 9:45 and 10 o'clock data. That's what today's about, right? So just be careful of that going into today's session, right? Just understand data is going to be impacting how we trade today at 9:45 and also at 10 o'clock. Today's session, also a very key thing to note is Monday really should be for data collection, right? I know it sounds stupid to say that, but the more you trade, the more you realize something. Sometimes you just don't know exactly what to do. And that Monday morning session of just watching and seeing what's going on helps you create those ideas later on that day and also later on that week, right? So this morning session, even though we obviously do have data at 9 o'clock, 9:45 and also 10 o'clock, it's important to recognize the fact that this morning session, you're going to see in the charts in a minute, there really is no direction right now, right? We're back in the same channel we were last week. And for that reason, there is a strong argument to waiting post 10 o'clock today to take that first trade. Okay. Now, granted, if you see something at 9:55, take the trade, go for it, right? But of course, understand that maybe waiting for that data today to come out and collecting that data, the early morning data on Monday morning, is what's going to make all the difference in your trading this morning. I think that's just a key thing to note for myself, something that I do on Mondays, and I want you guys to start thinking about that as well going into your Monday session. So obviously today, be a data collector as we go into our data this morning at 10 o'clock, right? Also tomorrow, Tuesday, we have factory orders, job opening is going to be big tomorrow. And then obviously Wednesday, Thursday, Friday. We'll go over this as we progress through the week. But this week is an important economic week with data almost every single day. Actually, literally data every single day. That's important, okay? On the earnings docket, there is nothing important, guys, unless you're trading Campbell's Soup. I don't know who's trading Campbell's Soup this morning, but if you are, you probably have other problems to be worried about. Campbell's Soup reporting this pre-market session. You've DG, Dollar General, you've NEO, you've CrowdStrike, CRWD on Tuesday. Wednesday session, you've Dollar Tree, DLTR, MongoDB, Cracker Barrel. Also, if you're trading Cracker Barrel, you probably also have other problems to worry about. You DocuSign, you have Lulu, you have Avgo, which Avgo, of course, is going to be probably the biggest one of the week. Avgo, CrowdStrike are the two big ones this week. The big dog being Avgo. Avgo, of course, going to impact that chip sector. So be careful of that, right? That's going to obviously have a profound impact and influence on what the chips do for our Thursday session. Okay. Fancy. Thank you very much, Fancy. You are awesome. I saw Fancy had a killer day on Friday session. A killer day in Friday session. So that's awesome, Fancy. I hope you have a nice week ahead of you. All right. So SPY chart. SPY. On the SPY chart, a little bit of recap from what happened on Friday. On Friday's session, we had two critical demands that we spoke about. Again, these levels level almost every single time. If you are trading other names outside of your SPY, outside of your Qs, it's been a little bit of a tough week, right, last week. But if you do trade these other names, say SPY, right, you do see that there are reactions almost off every level, okay? We had the 586 on Thursday session, that was our demand, and we spoke about this going into our Friday session being technical demand, and that was a level we held on Friday session. If you guys were on live trading with us, this is where we mentioned the idea to build longs, right? Hey, long SPY 586. Why? Because this was the demand from yesterday's session. That was the level we maintained, right? So I did take longs here on Friday's session. I got a little bit of upside move off 586. 583 pullback end of day. I did not take this trade. 583 was just an insane move down lower, flash sell into 583, 583 maintained, which also was our next demand that we spoke about on Friday. And the level below that was 576. So the three levels of demand were 586, 583, and 576. Okay. Now, going into our today's session, you're going to see that the channel from our Friday session, was simply what? It was 592, 583. And this is a really wide zone. Normally, we don't really get wide zones like this, right? This is a very wide zone on SPY's chart. The past few weeks in a row, we've seen some pretty wide ranges. The problem, though, is that the zone, the death zone that has been tormenting us for over a week now, right? The death zone that's been tormenting us for over a week has simply been 592 to 586 and 592 to 583. You can see that the crazy breakout trade here from Wednesday's session, we didn't even get any of this price action. So this may look like we got some nice, beautiful price action, nice breakout price action. But if you look back at the price action here, you're going to notice that all of this action, all this breakout occurred pre-market, right? We've actually had no trading session last week during market hours, regular market hours, where the market has been above 592. I know it's been a little bit weird to say that, but again, that's what happened yesterday. Maybe for like 2 minutes off the open, there was a little bit of PA above that 592. But for the most part last week, we've simply just been under 592. And if you want proof of this, right, let's do something crazy for a second. Let's turn on our regular trading hours right now on SPY's chart and look at SPY right now, right? Look at SPY last week on regular trading hours, right? Not extended. Let's just look at it during 9:30 to 4 p.m. market open, market close session, right? We're not talking anything pre-market, not anything after hours. And look how horrible the price action was last week. If you had a session last week where you had a little bit of some difficulty going into our Monday to Friday last week, right? Well, it's not really because it was your fault. It's because the market literally was doing what? It was simply in this big box right in front of us, right? With a channel low here at 586 and a channel high here at this 592 level. That was what happened going into our last week. And obviously, where are we at this morning? Well, hey, you know what? Don't get excited. We're still simply at the channel low, right? So when I said this morning, be a data collector, it's not because I think always on Mondays we should take it easy. I know it's true. You should probably take it easy on Mondays, but it's because also we're still in the channel, right? And let's see what happens today. If we can actually start forming a break of the channel high or channel low, because that would give us the most probability trades, right? Obviously, if you see a break and hold above the 592 level, right? Not during our pre-market or after our session, but during the market hours, right? We could look for long simply above 592, right? And that should be our first idea today is let's look to see if 592 can break. Because if 592 can break, right, then we should see the move back into 596, right? And again, that is the big supply above us. So if we do see a breakout above 592, I would expect a little break and retest upside play, similar to what happened here during our after hours and pre-market session. But again, I think it'll be much easier to trade because again, we will be able to trade options during that moment, right? So above 592 for long side trades, I would watch that today. If we do pull back even to 583, right? This is not an area I would want to be short into. Okay, I still last week I said this over and over and over again. I still say it this time too. There is no real reason we should be overly short right now, right? Every level of demand that we get, 586, 583, 576. These are opportunities for you to go long on the market. Notice this for a second. Every time you see flash sells in the market, flash sell, V shape, flash sell, V shape, flash sell, V shape. Almost 7 or 8 times in a row, it's been the same thing, right? The same thing keeps happening. But this is what's going to happen as a trader. We're so inclined that when we see a little bit of a red candle forming in the market, we see a little bit of a red candle forming in the market like this, a red candle forming in the market. Oh my God, we're flushing, right? We think it's going to go down lower because why? It's a red body candle, right? You see a beautiful red body candle, you're like, oh my God, we're probably going to go lower. It's not the case right now, right? The case simply has been that every time we sell into a key level of demand, we tend to hold that key level of demand. Obviously, turning that red candle into a full body green candle. The next thing you know, we reversed it and we're wondering, oh my God, should I have went long there? And the answer was probably yes, you should have, right? So today's session, I don't think it's anything different. If you see flash sells today, watch 583 for demand. Again, the same level from yesterday's session, Friday session, 583 technical demand, 576 technical demand. If we sell into 576, this again is a macro long spot. I would look for long side trades off of. So again, just to repeat myself so many times because I know I probably sound ridiculous right now. 576 technical demand. If we pull back there, look for longs there. 583 is a level we tested on Friday. I still would argue if you see confirmation on 583, you could also go long off the 583. And then lastly, the best possible trade today, the thing you want to happen is a break and hold above 592 because if you do break 592, we should see upside back into 596. Where does the market shift? Because we can't just be perpetually bulls. If we lose 576, the macro demand, we are now shifting, and I don't want to long every demand anymore, right? That's so important because eventually there's going to be a moment where I am wrong, where the market touches the demand zone and we just fall right through it, right? And that may happen if we break 576. If we break 576, that's where I think things become obviously more so bear-sided, and I don't want to touch longs anymore. So again, 576 is that bull side case. If we are above 576, test every level for longs. If you lose 576, don't go long anymore. Let the market sell back into the 5600, back into 555 SPY. Okay, that's what I think here on the SPY chart. Again, I spent way too much time here today, but I want you guys to be aware of what's going on here on the indices. On the ES futures chart, you can see here the level of technical demand obviously is right. It's right in front of us, guys. There's not much more I have to say here, right? You can see right in front of us we have the major demand that we spoke about on Friday, going into our Friday session, being really we spoke about 58.70. We didn't even speak about this low here off the open. We spoke about this demand over here. So it's kind of interesting to see that we tapped 2 levels of demand on Friday. The first level being that 586 and the second level being that 583. This morning, I think obviously the level to watch out for in the ES chart is going to be simply just this zone here, right? It's going to be simply the top of the zone here being 59.24 and the bottom of that zone being 58.70. Now, I can't stop there because the problem is you can see my level was 5924 to 5920 on Friday session. On Monday, it's important we make adjustments to our levels, okay? And the first adjustment I'm going to make here in ES chart is adjusting for the high here from Friday session. So the first adjustment I'm making here in ES chart, because this chart's been unchanged since we talked about it on Friday morning, it's going to be adjusting for this channel high now, right? 5931 being that Friday high. And then our Friday low is actually around 58.55, right? So those are the 2 levels I'd watch out today. I would watch to see if we can break and hold above that 5932, right? 5932, I can make an adjustment here, right? If we can break above that level here, I think we can see a push in at 59.50. If we break and hold above this level, this is the colossal level you want to see us break and hold above. If we can break and hold above this level, that's where big upside comes in back in 6,000 ES. That's the free-flowing upside move that I look out for. And again, the golden level is still simply 57.70 here on the ES chart. Wow, DJ Priceless, man, you are awesome. Wow, that is crazy. That is absolutely crazy. Thank you very much, DJ. You are awesome. All right, That's great. You guys are absolutely insane. Right, let's move on, guys. Let's go over our Q's chart. QQQ. On the Q's chart. On the Q's chart, you can see the level to talk about today in Q's is 512. This was, again, the level we spoke about on Friday session. Why the market maintained on Friday was because 512. 512 is demand on Friday. And then, of course, we still have 522.50 as supply. The channel, though, is still simply just this, right? This is the channel. This is the channel here that we have on the chart, right? Obviously, you have our channel low here at 512 and a channel high here at 522.50. I think we obviously have to break either end of the channel, right? That's it. That's all I'm going to say here, right? Break the channel high or break the channel low for continuation. And that's all we have to talk about here on the QQQ chart. On the NQ chart, is this 512 level 21,000 NQ? Is that the right level here? No, it's not. It's not perfect. It's not perfect. No, it's not perfect. I thought it was going to be perfect, but it's not perfect. It would have been really nice if that NQ 21,000 lined up perfectly with that QQQ demand low from Friday session. Of course, not the case here, right? But I would say the level to watch out for still is on the NQ chart is still this 21,000 level, right? So if we are above 21,000, we are bullish here on the daily time frame. What I'd look out for today on the Qs, and I mean, still, like, you can see this more so on the QQQ, but is this consolidation here? Why do I say these demands are still opportunities for longs? The reason why is because you have a very contorted bull flag, right? I know it's a horrible bull flag, but you have a very contorted bull flag here. This is just simply a bull flag, right? A beautiful upside push, holding demand, holding the daily turner SMA, right? These levels are still pointed for upside, right? The market is still gearing for upside right now, right? And that's why I'm saying as long as we're above 21,000 here on the NQ chart, and that ES 5770 and the SPY 576, then for that reason, we should be more so bull-sided, okay? The levels are still maintaining. That's why we talked about SPY longs on Friday all day, and that's why the levels maintained. Today's session, you want to look for this to break and hold above 52250, which in this case would be 21,565 here on the NQ chart. If we do break that level, I think we have upside back into our 21,884, right? Or 844, which is the next big level here. You can see that little high here from Thursday, the little after hours high. If you break above 21,858, then you have a push back into these highs over here, that dotted line, which will make orange for you guys. You can see it, right? That's where we're going to if we break and hold above that 21,840. Okay, so the levels are pretty clear this morning. Again, on NQ, it's 21,000. That's the big level. And then obviously resistance here at 21,550. On the Qs, just to recap, it's simply channel high here, 522.50, channel low here, 512. Those are the big two levels. On the SPY chart, again, recapping here, on the SPY chart, it is simply just going to be the 586 demand low, 583 demand low, 576 demand low, and then 596 big supply. You don't want to be long in the supply. You want to be long at either the demands below us or you want to be long above 592. Those are the things to understand about the charts on the SPY, on the Qs, on the NQ. Let's now dive into our tickers of the day. Let's talk about the first ticker of the day, Tesla. Okay, so I want to get a sip of water. I want to read the chat for a second. Does everybody understand what I'm saying here? We have 1,100 people in here. We have, how many likes do we have right now? We have 300 likes. Let's get the like count up, guys. Let me get some hydration, and we're gonna move on. So here on the Tesla chart, so Tesla had a pretty interesting failure, right? And I'm going to talk about a few different things today, right? We're going to talk about some things that look weak and some things that look strong, okay? And that sounds really like it's pretty much what we do every single day anyway. But this is the level here on Tesla, right? We have our 350 channel high and we have our 332 channel low. And to sort of give us a little story here on Tesla, and we'll talk about this chart as if it were a story, okay? You have that beautiful consolidation. And then on Tuesday's session, we had probably one of the best long opportunities, right? We went long above that 350, ripped higher. It was a beautiful trade, okay? And then shortly thereafter, Friday session, we looked strong, right? And I think many people would argue this chart looks primed for a pullback long here at 350. And you can see that this would be your bounce, right? So I think everyone logically would say, let's look for longs off 350. Then of course what happened here on Tesla on Friday session was we failed 350, right? You saw a little bit of some crazy end of day selling into 350, a break and fail under 350, and now this morning we are under 350. For that reason here on Tesla, in complete contrast with the overall market, I would not long Tesla, right? I think we should not. I don't think I want to long Tesla as long as we're under 350. That's my important thing here. The reason why I don't want to long Tesla as long as we're under 350 is because we are under my little trend line, right? And this trend line, it may not seem so important, but if you look at what the market's been doing over and over again here in Tesla, it's been doing this, right? You see beautiful upside, bullish consolidation, beautiful upside, right? Bullish consolidation, bullish consolidation, bullish consolidation, beautiful upside. And then all of a sudden, we have the first failure point on Friday. This failure point is really interesting to me. If we are under 350 on the SPY chart, I think we are limited to upside, right? And we should look for, in my opinion, shorts on this chart as long as we're under 350. So what I'd be looking for on Tesla, given the fact that we lost our bull structure here, is I'd be looking to see if we can do what today? If we can lose 332. If we can lose the channel low here, this channel low from last week, right? If we can lose this 332, I think we can look for a very beautiful break, retest short under 332 for a move down lower. And if the market sells, this should sell even more, right? So watching for puts under 332. Likewise, someone already said it, James Wilson. Yes, absolutely. That's the next play I'd be watching to see if we can fail 350. If we can push into 350 to 355 today, right, and I see some failure points come in, I'll look for the bear flag and the move lower, right? And of course, this is asking for the market to be weak. I don't know if the market's going to be weak today, but again, this is what I've been looking for in Tesla today. Mostly bear-sided charts. And the reason why is because we are gapping down. The chart's weak. We're under supply. This could be a nice break of structure and continuation play today. So watching to see if Tesla can continue the bear side sentiment, right? Obviously, it's still early right now, but watching for 350 rejections and 332 breakdown. If we do break and hold above 350 again, if this happens today, we see a break and hold above 355, really. If you see us clear above that orange line over here, 355, then obviously this rips higher, right? So of course, the what makes this bearish is the fact that we're under the supply zone. And if we flip that bear side and break above 355, then you can take the opposite play I'm saying here, okay? So watch and see if we're under 350. If we are, short side plays. If we are above it, long side plays and move higher, okay? So let's move on, guys. Let's go over Nvidia. On the Nvidia chart, so Nvidia on Friday was absolutely horrendous, right? If you guys remember, what did we speak about on Friday session? We spoke about the idea of pullback longs on Friday at demand here. And on Friday session, I long demand. We moved higher off demand. We saw a little bit of reversion off demand, and the contracts actually did not move, right? So this was a clean case example of options just being difficult sometimes, right? Sometimes you have the most beautiful play, right? The most beautiful entry. I wouldn't say the most beautiful entry because we didn't get early here. We got in at the top of that level here, right? So this was a little bit of an early entry, but the idea still was reversion off demand and the contracts just didn't move so well. What can we do now on Nvidia? Well, in my opinion, just like Tesla, Nvidia now also is bearish. Why is Nvidia bearish? Nvidia is bearish because we're under our key level of supply, right? This is not what you want to see, right? This is not what you want to see. Look at this chart for a second. You can see that we saw a beautiful upside consolidation, beautiful upside consolidation, beautiful upside consolidation, beautiful upside consolidation. And finally, on Friday session, Wednesday into Thursday into Friday, you see beautiful upside, and it should have been followed by consolidation, but the market moved down lower under 137. Even though the 137 maintained as support for a little bit, right? You saw some support maintenance on that Friday session off of our level here at 136, 137, right? It broke and failed under 136 into our end of day, 11:30 a.m. And we actually saw the chart flip from a bull side chart to a bear side chart, right? This was the prime example of you being able to go long on Nvidia and you also being able to go short on Nvidia if we lost 136. We lost 136. I didn't short this chart, right? Because I wasn't really looking for shorts in this chart. But now this morning, if you are under 136, you should be looking for shorts in this chart, right? If we're under 136, look for shorts here. If you break and hold above 137, then obviously longs. But right now, we are mostly looking for failures here at 136, 137. That's what I'd be watching out for today in Nvidia, is if we can pop into 136, 137 and look for failure points there. Again, why? Because we failed back below a channel high, right? If we can turn this channel high now into rejections, then that should be your top watch for today's session. Look to see, can this Nvidia chart fail 137 today? If we can, that's your short, and that's simply it, okay? If we do this today, if we see us sell off like that, and you're wondering, can I short the chart now? Don't do that, right? Because we're back at 128 level of demand. Don't short back into this daily 200 SMA because, of course, big level of demand combined with the 128 demand low here. So again, even though I'm talking about big supply here at 137, there is also big demand here at 128. Okay, so be careful. Big demand, big supply. That's the story of today here on Nvidia. Right, AMD. On the AMD chart, it's about 107. 107 is our demand low. 111 little midpoint. 116 level over here. I don't really have a good understanding of AMD right now. Sometimes, like I will tell you guys over and over again, I will tell you guys when I have clear understanding. I will also tell you guys when I don't have clear understanding. And I think that's important for me to do because it's not always about me coming in here and bullshitting, right? Because I'm not going to bullshit you guys. I have no clue what AMD is going to do. This is simply just a little bull flag, right? And then a breakout of bull flag and then some sort of failure coming in here. So no idea what's going to happen here in the AMD chart. The levels, though, as I see it, are 116 supply, 111 level, 107 level. That's all I have here in AMD. If you want to trade it and you have a more conviction than I do in this chart, then you trade it yourself. But don't involve me in that one, okay? AMD. You're on your own over there, right? On the SMH, this is so important. I just spoke about Nvidia being bear-sided under 137. That is true in my opinion. Now, what could make me wrong about that idea is the fact that the SMH has not broken demand. This is incredibly important. I want you guys to see something, right? Look at what's going on here on the SMH chart. On the SMH chart, we have our beautiful golden zone here at 238. 238, big level, just believe me there, right? Big level of demand. You can see 238 has been notoriously a very big pivot on the market. And you could argue it's not simply just 238, it's 238 high here, all the way down to these demand lows here around 235. And if you look at what happened here on that Friday session here, you saw the market fail. Right, but the SMH still maintained, right? The SMH, and this is part of the reason why I longed Nvidia on Friday too, was the fact that we were holding 238 demand, right? We just longed back into SMH 238. Today's session, if we are above 238, more bull-sided on chips. If we are below 238, more bear-sided on chips, right? This is the golden zone. Let's watch and see how the market reacts to that golden zone. Again, long side trades above 238, short side trades under 238. That, in my opinion, would set us up for some good opportunities going into our Monday morning session. Okay. All right, let's move on. Let's go over Apple. Apple's chart. Apple 15-minute time frame. You can see here, kind of similar to that AMD chart, right? Apple, the clear as day level, in my opinion, is 200, right? You can see that the market has been giving us many interactions off 200. I don't really like this chart for longs right now, as long as we're under 200. I think this is a chart that you want to be mostly bear-sided on, right? The reason why I say that is because we're still under resistance here, right? The big resistance here is at 207. I think at some point Apple will make a big move. I hope it does make a big move soon. But I think for bulls, it really has to clear above 207. If it can clear 207, that's where I think you get the free-flowing move back into highs here. That the reason why I say that is because you have our beautiful consolidation break here. And if you just zoom out for a second, right, you can see the consolidation all the way from back in early February or even late February, really. The little trend line that we're sitting at right now is 207, right? If you can break and hold above 207, that's where things become free-flowing. Until then, I don't really like it, right? This is where I'd be looking for longs and bull side trades. As of right now, right, we're under 207 and we're actually under 200. I don't really like this for longs right now, okay? Maybe if you see us start to maintain and set up a long here off 200, you could do that for an upside trade. But again, this is not going to be as free flowing yet. What's going to cause this chart to be free flowing is when it breaks and holds above 207. If that happens, that's where things become free flowing. So again, you can watch longs on Apple, but it has to be off some sort of level, either above 200. If you see us retain 200, look for longs. But the best possible trade, in my opinion, comes in above this 207 level. That is where we have long side trades back in the highs here, 214. Right. So, guys, someone said no one even typed Apple. I go through the same routine every single day, right? I am not just going to simply read the chat and go over what you guys are watching. We have to. I know I will go over what you guys are watching, but I have to go over other names as well, right? Because this is not simply just a festivity where I just run over everyone's tickers. Right? I'm going to go over your tickers, but we have to go over some data names first, right? This is the routine almost every single day, right? So level on Amazon, I don't think anyone typed Amazon, right? But we're going over it, right? Level on Amazon is 206.50. You can see big level here, 206.50. This is where I am more bull-sided here in Amazon, right? The reason why I am more bull-sided here in Amazon is because we haven't really failed any levels right now. But I would want to see this above 206.50 for real conviction, right? If we can maintain 206.50, we are bull-sided here, right? So look for longs above 206.50, right? That's where I look for longs back into highs here. That's probably the only trade I really have right now. If you want earlier entries, okay? If you want to get an earlier entry here on Amazon, there is a case to do that, and I want to explain it to you in a second, right? You can see that the consolidation, the low of our Friday session is 202, right? And if you guys recall, when I went over Amazon on Friday, we spoke about that 202 level, right? 202 is the level. So be careful of 202. Not only 206.50, this is where longs get free flowing, right? But if you want to look for early entry longs, look for a retention play off 202, right? That could be your long side trade off 202. If you lose 202, I don't like this for longs at all, and we probably are more bear-sided. So those are the levels today in Amazon. Again, just to repeat myself and make this as clear as possible, okay? I would look for longs above 206.50, only back into these highs over here, 212. I would look for longs off 202 if I see it confirm and a strong maintenance there. I can look for longs off 202. If we lose 202, I don't like longs at all. I think this fails back lower, back to 196. Those are the levels here on Amazon's chart defined by what we do with these levels. Okay, so pretty much anything can happen here. Let's just watch and see what happens with the levels in front of us. Okay. Right, now I'm going to go over the charts you guys are watching. Right, we have to go over our normal routine first. I know it's Monday, so people are eager for tickers. We'll go over it. PLTR. So PLTR is about 125. As I said before, 125 is a level. If you are a PLTR trader, you are a 125 trader. You should just get a tattoo of that on your right shoulder, okay? 125 is your level. 125 broke out, big upside. Pull back to 125, big upside. Today's session, right? Don't be long into no man's land. If you're going to be long somewhere, watch 125 again. Let's play the same game over and over again, right? Until it doesn't work, let's play the same game. Watch 125. As resistance now, though, you can see there is resistance in front of us. The all-time high comes in here, 133.50. Be careful of that all-time high, okay? So, speed round now. Now, if you thought I was going fast before, watch what happens right now. Let's go over speed round. Coinbase. Coinbase chart, 250 is your level here in Coinbase. You see a beautiful break, retest upside move, downside trader on 250. The level to watch out for in Coinbase right now is this demand between 250 and all the way down to 240. It's a big, huge $10 demand zone here. If there's going to be a long setup here, it's got to be somewhere back in demand right now, right? Watch this demand zone between 250 and 240. That's your long side trade. Obviously, watch Bitcoin and see what Bitcoin does. Bitcoin right now is failing all-time highs. This to me is not really so good on for Coinbase, right? Why? Highs, breakout, oh shit, failure, downside move, right? So be careful of this. I think this probably pulls back into our daily to our SMA. That's where I'd expect this goes to, right? Somewhere over here. If we can get above 107.50, then obviously upside. But as of right now, the most probable scenario is a pullback long here to 95,000, right? And I think that's going to impact your Coinbase charts. Okay, so let's move on. Where is everybody? Why is everybody sleeping? Why is everybody sleeping? There's no tickers being typed in the chat right now, or am I lagging right now? Am I lagging a little bit? I am lagging. There we go. Okay, so KO. KO's chart. KO 73 is your level here, resistance here. 73 resistance, 67 demand. Lift. You guys can spam now. It's okay. You guys can spam. We are okay with that. Go crazy now because I'm gonna try to go as much as we can. Lift. Lift 15.4 is your demand zone. That's your big level. Watch 15.4. This is your break and retest upside trade. If we lose, I mean, arguably we are already beginning to lose demand here. If you lose 15, this is no longer bullish anymore. So watch 15. Meta. On the meta chart, bull flag play still intact. 655, 646 has to break. If we can clear 646 today, back into 660. Okay. Nvidia we already went over. SPY we already went over. Meta we just went over 2 seconds ago. Netflix. Netflix chart 1200 is your level here. Netflix, that's your big level to watch out for. If we are above 1200, look for longs. If we're below 1200, look for shorts back in the 1080. Okay. UNH on the UNH chart, UNH is doing something really interesting. What is UNH doing? UNH is bullish, right? Why is UNH bullish? Because look at what it just did. It formed a low here, a higher low here, a higher low here. And it formed a series of equal higher lows here, equal or equal magnitude low, higher lows or equal magnitude lows. For that reason, as long as this chart is above, and you can really come in this chart now and you can define your level right in front of us. As long as this chart is above 296 right now, it's bullish. So this is your level now, right? If UNH is above 296, you're bullish. If you lose 296, we fail back lower. Okay, that's your big level here. NVO, yes. NVO, if you guys are in Honey Drip, which I assume many of you guys are, I am watching you NVO right now bigly, right? You like my words there. Bigly, I'm watching NVO. Why? Because of something so incredibly beautiful on the weekly time frame. It reminds me of Nvidia, and I will be moving a lot of capital here, right? I'm going to get the proper entry. I want to do some more research and fundamentals here, but the chart to me looks really good. So I need to do a little more research and get a proper entry right now, but I'm watching NVO like a hawk. Why? Because this massive weekly time frame break and retest. Okay, guys, thank you all for joining in. I will see you guys all for live trading. Happy and safe trading. It's Monday. Take it easy. It's not about being the first trader in trade today, right? Let's wait for our levels. Let's wait for our setups. Let's collect our data. Then we'll execute the trade as it presents. Thank you all for joining in, and I will see you guys all for live trading. Bye, guys.